Okay, it's Friday, January 13th. This is an end of the day, an end of the week SPY report, and today we end up with another green bar that started near the low end of the range, moved up all day, and actually took out yesterday's high. So we closed the week with a very strong green bar. That means we're certainly going to follow through higher next week. You know, even if it's just a little bit, we could always fail, but at least at some point we're going to break that high into next week. And we're kind of still in line with the scenario that we discussed right here on Tuesday, where we failed that, we had the breakout to the upside that looked like a failure of this range. And then the next day it didn't follow through and we came up. So it showed you that this breakout was likely for real. We're now heading up with a strong green week after this hammer bar last week. And until proven otherwise, we're working towards those targets to broaden out, and we'll look for weekly reversals as our sign to really get comfortable back to the short side. So that's what I was talking about in the morning. We were gapping down pretty big near the lower end of the range, the lower end of these blue lines, and I was showing how it's kind of in conflict because the context and continuity is still to the upside, but maybe we'll get a little pullback today. But as it turned out, if you look at the 15-minute chart, out of the gates, you didn't get any kind of red move to start lower, and if anything, there was a initial buy here that really wasn't above the halfway point of the prior day. I normally like to see my buy signals, unfold there, but it was kind of at the bottom of the range of yesterday. But so I shot a morning video, I was saying, yeah, it was possible you might have not taken that type of signal, expect with such a big range and such a big sell-off pre-market to head all the way up there. But what often happens in these cases where there's a little conflict and you're kind of just waiting and seeing at the open as opposed to aggressively trading it, once you saw that come up, that showed you that the trend of the day was likely to the upside. And that's where I mentioned that if you get this orderly pullback, look to buy it for a secondary trade. And there it was right there. I bought some calls. What I actually did at the time, then I shot a video how, to me, I was going to sell at that target. I didn't necessarily feel comfortable that I was going to make this type of move, but it actually did. So it went up and took out the pre-market highs, paused there, and then closed strong near the, even above that. So you can never predict that stuff. It was just intuition that maybe we wouldn't be strong. But, if you bought here, A, you could have taken profits up there. B, you could have scaled out there and then set your break-even stop somewhere down here and rode the rest, either maybe to this next target and exited there. If you didn't want to do that, you can have a trailing stop and get it all the way to the close. So it depends on how you want to trade. But it was an overall, good. Once you saw the first move of the day head up like this, you saw that the structure of the day was to the upside, and this is the type of pattern you would look for to enter. So that's the way it kind of works on days where you don't get in right at the open. You kind of, if I see a move up, then I'll kind of look for that halfway pullback, type of thing to try a secondary trade. Or if it would have went down and you missed it, same thing on the downside. So anyway, we end up strong. The weekly chart's still heading up, so to these areas here until proven otherwise. The monthly chart is still inside, of last month, but green. So we're going to need a weekly reversal to even begin to consider that it might move down to the purple line here, which is the, turn the monthly chart red, which can take out the prior month's low. And the longer we go in the month, the more difficult that becomes. So step one would be a weekly reversal, and we're nowhere near that. We'll get into that next week. I think it's a shortened week again trading, but that's going to be maybe a move up a little bit that comes back to the halfway point of that bar. If we go up for, let's say on Tuesday up, and then we have a big failure and, we come down to the midway point, that could be the start of a failure. Other than that, it's going to be some kind of 2 up, 2 down weekly. By then it's going to be near the end of January, and it's going to be hard to get down to the open of the month that turns it red. So anyway, all signs are to the upside. That's how you're playing it today. Again, if you didn't catch that opening move, then there was definitely a secondary trade to take, and there are all kinds of ways to profit from it, either small or relatively big. But pretty strong market conditions here. And again, we'll just expect follow through next week. I'll go into, next week how there's exhaustion risk, creeping in the more and more days you go up. The ideal trades will be some kind of pause that can fail to kind of turn the weekly chart red, or reverse it and then start up again. So those pullback, days, if they develop, will be great trades as the trend continues up. But in the meantime, we're just going to have to kind of go with structure, and if you have continuation trades, then sometimes you might well, we'll see. There's not always momentum, day after day after day with these kind of trades to the upside. So we'll just have to see how it unfolds. But definitely the buys are still up. And again, I guess it's a 3-day weekend here, so we'll have to get going again next Tuesday.